Hello and welcome to TRB Trading, and in today's video I'm excited to answer a question from one of my loyal subscribers. Sharice asked me to explain to her what options is, so that's exactly what we're going to do today. There's her comment up there. And so I'm going to explain options the way I understand it as a beginner. So definitely do your research to get more details, but in a nutshell, options gives you the opportunity to control 100 shares with one contract, and then you will make money based off of 100 shares versus one share. Each contract has an expiration date in which you get to choose. One of my favorite things about trading options is that it gives you the opportunity to make money when the market is up and when the market is down. That's one of the biggest things that I had to understand, because I was like, how do you make money if the market is going down? That didn't make sense to me. But I did a lot of research on it, and I found that options is a great way to be able to take advantage when the market goes down. So for example, if you think that the market is going up, then you would buy a options call. So a call simply means that you think the price is going to go up and you want to make money on the way up. However, if for some reason you feel like the market is going to go down, then you would buy a options put. So a put means that you think the market is going down. So simply put, that's how you make money when the stock market is going down. You just buy a put and you ride it down and you get out before it goes back up. Now I'm going to go ahead and insert some footage of how you would go about buying a call and buying a put if that's what you're interested in doing. I use the platform Robinhood. It's the easiest for me to buy calls and puts. I do have Webull, and you can do the same there as well. It just looks a little more complicated than what it does on Robinhood, so definitely beginner friendly. So that would be the app I would suggest for you guys to start off with if you are new to options trading. Okay, so now I will insert the footage of actually how to go about buying a call or a put. Alright, so I'm in Robinhood. You can search or use recent. I always trade hunt, so I've got it readily available. Hit trade and then trade options. And then at the top you'll see your expiration dates. You can pick from those dates at the top for the expiration. As you can see, these expirations can go out pretty far, but I like to go as close as possible because they seem to be a little cheaper in that way. Now, once you start to become profitable and build your small account up, then I would suggest using a little bit further out on the time frames and picking some options that are a little bit more expensive, because it seems that the closer you get to the strike price, the more expensive it is, but the better chances you are to make money. So, of course, it takes money to make money. Okay, so here you see all the prices. I just clicked one here just to show you. So this one, you have a 43.9% chance of profit, and I like to see a delta of 0.83 on a call. Well, really anything above 0.50 for me, but 83 is really good. Okay, so then you will just click buy, and then it'll take you to the order. So here you can see it says $1.65, but remember we're talking about 100 shares, so that means it's going to cost you $165.03, which is the fee. The 3 cents is the fee. And so here it's like an estimate of what your profit could be. So once that price gets to moving up, you can see it goes up, 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 up until you reach unlimited, and then the most you could lose is your $165 that you put in. You can also increase your contract size. So as you can see up there, you can do 2, the price will go up to double, and then you could put 3, of course the price will triple. So that's a good way if you get into a good setup. You want to go ahead and increase your earnings, you can go ahead and increase your contract size as well. Now we're looking at a put. You see at the top I went to put instead of call. I always stay on buy. I don't mess with sell, and I stay as close to the share price as possible, and it's affordable for me at the time. So this one says 49 cents, so that means it would be $49. And here we are, profitability here, the chance is 38%, and the cost for this options put would be $94.03. Max loss is $94, and as you can see, the max profit on this one is actually $1,156 as opposed to being unlimited. And you start making money as the market goes down. So it's showing you the price of the stock, and as the stock goes down is how you'll make money in this case. Okay, so for options put, the delta is going to be in the negative. So I like to see either negative 50 or higher in that case, or lower, however you want to look at it. Negative 50, negative 60, negative, 80 is good in that case. That's how I determine a good options put. And back to this screen here, you see anything you can get as close to the price as possible. So you see the price is $12.44. You want the call or option to be as close to that. It's called in the money at the bottom. So now that you've seen the examples of how to buy a call or buy a put, now you can see why it would be very interesting to trade in this way, because the amount that you could potentially lose is pretty much what you put up for the call or the put. And then especially on a call, the amount that you can make is unlimited. So if I buy a contract for $50, I might lose my $50 and that would suck. But the potential to make God knows how much is unlimited. So that is why I'm really interested in options trading, and I do it every day, Monday through Friday, if the market is open. So definitely feel free to comment down below if you have any other questions. I will get the answer for you. Again, a special shout out to Sharice. Thank you for your question. I hope this was helpful in explaining options as a beginner. I look forward to seeing you all in the comments. In the meantime, I'll be trading. Blessings.